Hey everyone, welcome back to Corporate Decoder. Today we're cracking open a particularly interesting SEC filing, one that hints at a potential transformation, but also carries a whiff of, shall we say, accounting magic. We're looking at Gryphon Digital Mining and their plan to merge with American Bitcoin Corp. It's a deal promising scale and a fresh start, but the fine print is as always more complex than a Bitcoin algorithm. Before we get started, if you appreciate getting straight insights from corporate documents, make sure you're subscribed. We also have a Discord community linked in the description below. Drop by and check it out when you're done with the video. First, a little background. Gryphon actually used to be a software company, before it merged with a Bitcoin mining operation called Ivy Crypto in early 2024. This latest deal sees Gryphon, still a relatively small player, aiming to acquire American Bitcoin Corp or ABTC. But here's the kicker. After the deal, the current Gryphon stockholders are expected to own only about 2% of the combined company. Think about that, a tiny sliver of the pie. This document isn't just a prospectus, it's a proxy statement too. That means Gryphon needs its stockholders to vote on this deal, and this filing lays out all the reasons why they should and also why they maybe shouldn't. One thing that might catch your eye is that if the deal goes through, each of Gryphon's executive officers and directors are expected to resign from their positions. The guys taking over at Gryphon are all former execs and directors from ABTC. It's a complete changing of the guard. This is probably why it came up that Gryphon's Chief Executive Officer Steve Gutterman is set to pocket about $230 million in severance payments and accelerated vesting of his stock units. The Chief Financial Officer Simeon Salzman is also looking at a nice $412,500 severance package, as well as Eric Galley, the company's Senior Vice President, Energy, will be entitled to receive a total value of approximately $80,000 in connection with the closing. Of course, the board thinks these benefits are mitigated because the company can just disclose these interests and stockholders can take them into consideration when deciding whether to vote in favor of the proposals set forth herein, right? To be fair, the Gryphon board did get a fairness opinion from Marshall and Stevens. Their conclusion: the deal is financially fair to Gryphon. If you're interested, you can see the full text of the M&S opinion. So what are the Gryphon stockholders voting on? The big ticket items are approving the stock issuance required for the merger, which needs approval by NASDAQ, and adopting an amended and restated charter, which is referred to here as the required proposals. There are some non-binding proposals too, like those about the golden parachutes and the amendment of the company's incentive plan, and another related to approving the adjournment of the special meeting to a later date or dates, if necessary. It's standard procedure, but worth noting. What happens if Gryphon stockholders don't agree to these required proposals? Well, there is a risk that Gryphon would be required to pay all of its contractual obligations and to set aside certain reserves for potential future claims. And there can be no assurance as to the amount of and the timing of such liquidation and distribution of available cash left, if any, to distribute to its stockholders. That is putting it kindly. The filing later says they may instead take steps necessary to liquidate the assets. So no deal equals possible dissolution of Gryphon, not a great alternative. Here's the real elephant in the room. If the merger goes through, the current Gryphon stockholders will only own about 2% of the combined company. ABTC stockholders will own around 98%, making it a near total takeover in practice. ABTC's been making a lot of claims about expanding access to capital and increasing shareholder value, and this is their proposed means of doing that. I doled all some of the reasons the filing provides for ABTC stockholders to approve the mergers. They need a NASDAQ listing, and it's much easier than an IPO. What happens if the companies fail to get a NASDAQ listing? The agreement can be terminated. You'll also be interested to note that if this condition is waived, Gryphon will not recirculate an updated proxy statement, nor will it solicit a new vote of stockholders prior to proceeding with the mergers. For context, the combined company is planning a crazy multi-class capital structure, where Hut 8 will own 80% of Class B shares, granting them the majority of the total combined voting power. For each one of these Class B shares, there will be 10,000 votes versus Class A common stock single vote. Now let's talk about some of the risks listed, because what would a corporate decoder filing be without them? Of course, neither company can be sure when or if the mergers will be completed. That's standard, but others were more specific to the companies. In Gryphon's case, there's an explanatory paragraph expressing substantial doubt about their ability to continue as a going concern, which basically means there is a risk they may not stay in business. Have in addition to that, and more specific to ABTC, there is something related to being focused on Bitcoin. If Bitcoin tanks, so does their whole operation. They may be unable to grow hash rate, which means they will be unable to mine Bitcoin, and that ABTC's operations are heavily dependent upon maintaining a good relationship with Hut 8, and that all the arrangements with them may not be as good as if they did not have the related relationship. Okay, let's scroll to financial results so you can see the picture more clearly. For the 3 months ended March 31, 2025, mining revenues decreased to $1.6 million from $7.5 million the previous year, a drop of 79.2%. Ouch. The main reason was the global hash rate increased, and there was that halving event that cut block rewards in half. Also notable that stock-based compensation expense increased over 270%, mostly due to stock awards for Gryphon board members. Now let's check out full year data to see the bigger picture. For the year ended December 31, 2024, mining revenues actually decreased slightly to $20.5 million. However, the massive volatility in this sector becomes clear when we look at which were a staggering $509 million, largely thanks to Bitcoin's price soaring. Keep in mind those paper gains can vanish as quickly as they appear. General and administrative expenses ballooned by $6.5 million, primarily due to more consultant use and other various fees related to operating as a public company. Bottom line is I expect even more fees and expenses if they are to continue with the merger's RFE. Alright, now let's look into the numbers F off. During Q4, the company improved its net income loss to slightly positive at $400,000. During Kazan 24 did the two almost become closer. Even then, the company still posted a significant loss valuation. The company makes several assumptions about what will make this merger successful, but these do not show up in the numbers. They state they need more capital, expect their personnel to stay, and the MMSA will help them to comply with. Now, say 100% difference have it under korfte $1,000 the company for. Did the improvement does not show a full picture, because their executives got a bonus at Alva. Although revenue did increase for the full year, with the increased use of services from consultants, the costs were significant loss become closer. Even then, the company still posted a significant loss. The company makes several assumptions about what will make this merger successful, but these do not show up in the numbers. They state they need more capital. After reviewing the SEC filing, this acquisition seems extremely risky. Since it's more of a reverse merger, the shareholders are diluted by a great amount, and that the assets that are coming in are the only promising revenue sources available. Alright, that's our breakdown of XYZ's latest filing. What's your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.